Hello, good morning. My name is Alexander, and today is the 1st of April 2021, and this is my catch up series. A recap of last week. Last week's date was 25th, and the market was actually around this level. This is VIX, Volatility Index 75, where I said the market was around this level and there was a rejection based off of this level being a tested area, but based off of structure, we had a double bottom, and what we were looking out for was some type of rejection to the upside if we pull out our fibs like this. If we pull out our fibs like this, we should be expecting the market to run into this level, and we see the market doing that, where I said this level is like a confluence of the minus 61.8. We could see the market run into that level also. Now, this Fibonacci is done. Time to pull out another Fibonacci and expect the market to do certain things. So what do we see here? We see the market rejecting off of 23.6s without it going to a PRZ level. So right now we see the market actually sitting at a PRZ level. So what do we expect? Potentially, we expect this market to continue going higher. But if it does not, a break of this level, and we'll see the market continue to go lower to probably this level before shooting back up, or it might just give 100%. That we do not know of. But what we do know of is the market is currently in a retracement, and I've been selling since yesterday, so I've been in profit for volatility index. So we might see this market drop back down 100% if it rejects this area if it rejects this area, we might see it go back up to probably this level or this high, this all-time high that it has, this level here, or we might see it reject this level here. Okay, so if it rejects from here, we might see it run into this level or a break of this level, and we might see it drop a little bit before it does whatever it wants to do. This for GBP USD, the market was around here, where we said we were expecting the market to come back to this level before coming back down. And that is what we can see. We see the market push back up. I was caught based off of this. I was a buyer on Tuesday. It hit my SL, but I took the buy again and made up for the loss. Now I'm looking to take a sell back to the downside based off of a rejection back to this level and some type of type 2 double top scenario followed by our signal to take the sell. It looks like it's ready to take for the sell to continue, even to at least this level, if 70 pip to at least that level, and we might see the market go further downward to to, let's say, this level here, we might see the market go back down to this level. Give me a second. We might see the market go down to that level. So this is that. Let me highlight it. We have this level here. We might see this market run into this level and maybe downwards. If it doesn't do that, a break of this level, and we will potentially see the market run up to that point. AED USD, I said potentially we're expecting the market to come back to this level. It didn't do that, but it rejected off of the 38.2, which is also a PRZ level. This would have been a good signal to take the sell, and you would have been in profit. We have a weekly zone here that looks like it's finally breaking. We want to see how this present H4 candle closes. Then we'll know whether it's broken or not. That is that. EUR USD has been in an extended sell run, and I'm just adjusting the Fibonacci to get a PRZ level before I enter for a sell. So this, where the market is currently at, it's a daily zone. If we look at it like this, we can see a bearish and a bullish candle means that this level might be holding. So for the next couple of days, we might see this market reject. Potentially, we might see it reject, or it might just continue to go downwards and push itself down to the lower daily zone. So let me take out some of these and clear my charts so I can have a clearer chart. All right, so that is EUR USD. Let's go to the next one. CHF JPY was around this level that day, where I said I was expecting the market to give a rejection before coming back down. And since I said the market has been stuck in a consolidation, and since this high for a long while is still holding, structure wise, this level has broken and we are in a bearish market. But we had a reason to counter trend trade this. I didn't take that, but you can see that it gave a reason to counter trend trade. Now it looks like it wants to continue its downward trend based off of several confluences of the discount level, the break of the trend line, a retest of the trend line, and um, a potential downward move of signal, and we might be expecting this market to go back down. But if it doesn't, you go on lower time frame and you can capitalize on the signal and make judicious use of the profit and just make money off it. ERJPY was my trade of the week. I had the reason to counter trend trade it. I had about 4 positions. Myself and my students caught this move on Monday. So what we did see was the market breaking this level, retesting it, giving a push. That push, then we had to go on lower time frame to capitalize on it. So um, that one is that one. So we're at this level now, and we see the market being in consolidation. Now we see some type of healthy bearish candle. So um, potentially we're looking for the market to go back down. But if this market does not go back down, a break of this level would mean that this market wants to go up back to this level potentially. And if we see a good signal on lower time frame, then we can capitalize on this sell to at least this level for a continuation to the downside. CHF, the same thing. We might see the market run into this level, or we might just see it break this level here and continue going up. GBP, JPY, this was where the market was at. And what I was expecting was a retracement, and that retracement happened. We're at the 100% retracement level for this pair. So it's either we see a rejection on lower time frame. I would like to see a break in structure first before I start looking to sell. Or if I do not see that, that means we are still in the bullish sense. But right now, this level looks like it's still holding with the bullish, bearish, bullish, bearish. So this level looks like a testing area. That level looks like a testing area, and I would like to see what price wants to do around that level. So market might just continue coming back down. A confirmed bear would be a break of this level based off of this time frame. If not, we'll just continue being a buyer. Remember, I said overall on the GJ, we are in the bullish sense. So if we are in the bullish sense, there was a break in structure here and a 100% retracement. So now we're expecting this market to go back down, but if it doesn't, we expect it to continue its rally. USD CHF was around here that day. So what we expected was the market to give a retracement. Has not done that, and it has been in an extended bull run. And I see no reason to take a buy just yet. But if I had looked at the pair and analyzed, there was a reason to buy here inside this point here. So that's that for that. For this, we are expecting the market to either come back down. So a confirmed bear will be a break of this level back to the downside. Um, that is the bearish retracement. So what we are expecting is for the market to retrace. So the market might retrace to this level and still go back up, or if it breaks this level, we might just see the market fall back down to give a deeper retracement. But right now, the market is currently in a bullish state where it has broken the weekly level. And remember, this is the first of the month, so the monthly candle is just starting. If you take a look at the last month's candle, you see how healthy it is. So let's go ahead and look at last month's candle. AUD USD last month's candle closed as a bearish engulfing, so we might be potentially being on a bear side for this month. Even if it looks like a doji, we might just see a bearish April. EUR USD last month closed a bearish engulfing, bearish variation of an engulfing. So definitely we might have a bearish month, but that is not set in stone. So we might have some bullish move first, but we might just end the month closing in a bear. Who knows? But last month's candle closed as well a bearish variation of an engulfing. So GU looks like a testing candle, something like a tweezers, or whatever English they call it, but it did not close an engulfing, so we might still be indecisive based off of the GBP USD. CHF JPY has been consolidating, if you look at it, for over the years. Over the years, it has been consolidating at this high, and you can see some type of three-pin formation where potentially we're expecting this market to come for a bearish move. EUR/JPY, last month's candle closed as a bullish candle, but it went up but closed back inside the wick of the candle, so it might be signifying some type of exhaustion, because this last candle, the previous last two candles closed with some type of buyer's exhaustion. Last month's candle closed with another type of buyer's exhaustion. So we might be potentially seeing the markets closing in a bearish candle, but we don't know that. But overall, probably before the year runs out, EUR/JPY might just run into this level on the overall scale. But we'll cross that bridge when we get there. So now we're just looking at the monthly candles so we can take advantage of trades and know what type of month we have. For GJ, we can see that we have a very bullish monthly level that has been broken. Last month's candle closed a healthy bullish candle, and as such, we might be seeing the market run into this level, higher and higher levels, and maybe potentially going higher by the end of the year. We do not know that, but we'll cross that bridge when we get there. There is some type of level here where the market might run into that. But last month's candle closed a healthy bullish candle. We have the beginning of this month being a bearish candle, so we want to see what's popping. So it means we might see this candle come down and go back up. USD CHF closed healthy bullish, so it means that the technical correction, the overall technical correction is not done yet. So it means we might, on the long run, see this market push back higher. And thanks to the stimulus checks being pushed into the markets, enough dollar is being printed, and lots of things going on in the dollar. It means we might see a bullish dollar for a couple of months, and that's that for that. So on the weekly scale, we have one candle bullish. This candle running as a bullish candle. It means if this week's candle closes as a bullish candle, this weekly level has been broken. It means that we might be looking at the market running back up to the 0.98 psychological level over the course of time. So that is that for that. So that's all for my catch-up series. I'll see you guys next week. Like, comment if you have any question. I'll be happy to answer your question. Like, subscribe, comment, share this class with your friends, with everybody, and follow us on all social platforms at Traders Hub NG, at Yusha Mindset, at King Alexander, King ALXNDA, Twitter, Instagram, everywhere. So, all right. Thank you guys. See you guys next week. Take care. Bye bye.